My name is Rick Howse. I'm President and CEO of Reunion Gold. And today I will give you a quick overview of the company and a little bit of background on what we're up to in Guyana Shield and some of the activities that are going on in 23 and 24, completion of our initial resource estimate and the start of our journey for development of this great discovery. So for those who don't know much about Reunion Gold, I'll start by saying it's a company that's been around for over 20 years. It's a TSX Venture listed company, and it started up in 2003. So it's been active primarily in the Guyana Shield, French Guyana, Guyana, and Suriname. And the active discovery that we'll spend most of our time on today will be our Oco West discovery in Guyana. So I think the key theme, I think, underlying the story of Oco West is it's a very significant discovery in terms of gold discoveries globally, and also in a very mining-friendly jurisdiction. And we'll talk a little bit about the management team that is driving the project forward. Just some key highlights, investment highlights about the company. We, as I said, had a new discovery in 2021, and it's in Guyana, the country of Guyana. And we announced in June of 2023 our first maiden resource estimate, which was 2.5 million ounces of indicated at 1.84 grams gold and 1.8 million ounces of inferred at 2.02 grams gold. We have certainly not finished with the exploration and the adding of ounces to this discovery. We have some near-term potential to expand the resource. I'll talk a little bit more about, but basically, particularly around the depth extension of this discovery and the higher grades that we have at depth. We're also continuing to explore the property, which is about 10,000 hectares of area, and we have a number of targets we have identified on the property and what we call the Takatu zones along the same shear that we discovered the primary discovery on, and the brine zones to the west as well on the property. So much more, I think, to come yet. There's a preliminary metallurgical results already out from 2023 that we released, which do indicate that we've got very good metallurgy, straightforward, typical of these Archean greenstone deposits that we're finding in this Archean greenstone belt that covers all the way from Guyana through French Guyana into Brazil and also otherwhere. So typical of those deposits that have been discovered there and the kinds of metallurgical recoveries that are coming out of most of these ongoing projects and existing operations. We're well funded. We have cash of $82 million as of the end of September. We did a recent financing in September of last year to top up the bank account, which is allowing us to basically carry forward with our exploration and our development work. We anticipate that we are pretty much fully funded all the way now through to a construction decision. So I think what's maybe a little unique about the project in Guyana, and we'll talk a little bit about the location and so on, but is that it's moving along a very fast timeline, and from discovery in 2021 through to maiden resource estimates was 22 months to get from discovery to maiden resource estimate, and we're underway with a PEA now study. But we believe, based on understanding now of permitting timelines and the work we've got to do yet in terms of studies and permitting, that we can actually be in production in 6 years from discovery through to production. So that's quite a quick timeline, and we'll talk a little bit more about that. But that's the timeline we're trying to work to. And as I said, we're in the midst of a PEA study, which we intend to release in the second quarter of this year, and carry on from there through the next steps all the way to a construction decision sometime in 2025. The Reunion Gold team is a team that's very experienced in the Guyana Shield. When you look at both the team and the board, it's a combined 225 years of experience operating in the Guyana Shield. a number of projects that we'll talk a little bit about, but the long history of finding, financing, developing, and operating projects within the Guyana Shield, and a proven ability to find and acquire projects in the Shield, which I think is a really important thing, is our network and our sort of relationships within the Shield itself allow us to acquire land, work through option agreements with landholders, and achieve sort of exploration success, as well as move projects through permitting and onto actual production. So if you look at the history of the company's been involved in a number of projects. As Reunion Gold, we actually built the Matthews Ridge Manganese project in the 2000s time period, and we're involved and in the predecessor company called Golden Star Resources, joint ventured with Cambior, in building the Omai gold mine, which was the largest gold mine in Guyana, and Rosabelle in Suriname. So both those projects were jointly built between Golden Star and Cambior. Of course, Cambior was purchased by IM Gold, and the Rosabelle mine was acquired as part of that. And that became the sort of the transition point from becoming Golden Star to becoming Reunion Gold. The company reformed after it sold its assets to IM Gold, and reformed under the name Reunion Gold from its original name, which was Golden Star. So we have built a number of, certainly a lot of relationships, so particularly with government officials, in terms of being able to know how to navigate the permitting processes, know how to navigate those parts, as also all of the partners we had along the way in a number of the projects that we worked on in terms of building them and operating them, and a number of obviously key partners that we needed to work with in order for us to do that. And the businesses that we interacted with in particularly Suriname and in Guyana. We have certainly a proven technical ability now in terms of specialized knowledge and experience for tropical environments, given the experience in the Shield of working in very dense rainforests and heavily rainfall active areas of the Amazon rainforest. And so that's helping us obviously to understand the challenges of that and how to navigate those particular challenges working in this particular environment that we're in. So all of that, I think, leads to sort of talking a little bit about the leadership team. The team led by the executive chair, David Fennell. David is a well-known mining entity and led both Golden Star and Reunion Gold over the last 40 years. Has had a tremendous amount of experience in the industry, financing, developing, building projects. And he's sort of I'll call it the focal point of the company's expertise and knowledge in the Shield and in financing and developing projects. So I was added to the company in 2023, initially as a director and later as the CEO, to help to advance the company's discovery in the Guyana Shield, or in Guyana. So my experience primarily working in international mining settings, over 40 years as a mining engineer, in both development operations, executive management, and large and mid-tier mining companies, including Caminco, Falconbridge, Inco, and most recently as CEO of Dundee Precious Metals, currently the chairman of the board of Torex Gold Resources, and previously I was the CEO of Dundee Precious Metals. So lots of experience, but not so much experience in the Guyana Shield. So I bring more of the broader technical and operating and development experience on a mining side, and then obviously financing experience from my years financing projects internationally. And we've added a number of players recently. Our new COO also has about 35 years experience, and then we have a corporate development and exploration experience group from their team from the exploration has been going on for a long time, led by a very experienced leader by the name of Justin Vandertoorn, and then our CFO and General Counsel have both been with the company a long time as well. So we are very excited to be operating in the Guyana, particularly in Guyana. It's a very exciting place to be right now. It's one of the world's fastest growing economies. That's primarily thanks to the offshore oil and gas discovery that was made by Exxon in 2015 and put into production in 2019. So Exxon and its partners have been very successful at outlining over 11 billion barrels of oil all so far on what's called the Starbrook property offshore, and growing production, heading towards sort of 1.7 million barrels a day. It's currently at about 350,000 barrels a day. But that's revenue-wise is having a huge impact on a very small country. So the population in Guyana is about 800,000 people. And so you can imagine with the kind of oil revenues that will be coming in and the way the revenue sharing agreement has been structured, that the GDP of Guyana is growing very quickly. It grew by 62% just last year alone. And it's growing at a pace of about 25 to 40% a year, and so that's the leading economy in the world in terms of GDP growth, and a GDP per capita that's gone from one of the lowest GDP per capitas in the Americas to now will be in certainly the top 30 countries in terms of GDP per capita in the next 5 years. So that transition that's taking place in their economy and in their wealth is having a huge impact on everything. The infrastructure, the country is finally able to invest in infrastructure, in education, in healthcare, and in a number of areas that will help it to improve its wealth status and hopefully benefit all Guyanese people, driven, as I said, mainly by oil and gas. But the other good news, though, I think, as it relates to mining, is that certainly mining has been a main part of the economy. It accounted for about 15% of GDP just for gold exploration or gold activities in the country historically, and that will shrink as the oil revenues grow. But it's always been one of the key pillars of the economy. The government recognizes that it has all the skills and necessary to support mining in terms of people, and therefore it's still the main focus for the government to continue to grow its mining activities in the country on the basis of the successful, I'll call it, geology that they have, to really help to employ people. Because as the oil and gas revenues continue to grow, it doesn't necessarily drive a lot of employment. A lot of the offshore oil and gas skills are becoming from outside the country, and the employment levels aren't that high relative to mining, whereas mining tends to employ a lot more people per project or per revenue that's generated. So we're happy to be in the country in terms of that, because the rule of law around mining is very well established. As I said, a long history of mining. There is a lot of artisanal mining in the country. About 70% of the gold production in the country comes from artisanal mining and 30% from large-scale mining. But I think the large-scale mining activity is going to grow in the near term as more and more discoveries are made in the Guyana, which is still relatively underexplored. And the activity levels have increased in terms of mining companies that are active in the country, looking for discoveries. So we're very happy, and certainly very happy to be one of the major new discoveries that the country has found. It's certainly the largest one so far. It's not the largest discovery in the country. Omai was a larger discovery in terms of about I think it was 6 million ounces discovered at Omai. Toroparu has about 7 million ounces, a copper gold discovery to the west of us. and the Aurora mine, which is the only current operating large-scale mine in the country, has about, I think, 5 billion ounces in that discovery. But we are a growing discovery. We do think that we'll eventually be one of the largest, if not the largest, discovery that's been made in Guyana. And certainly globally, it's certainly one of the highest quality and largest discoveries in recent years globally. And just in terms of understanding the country's rating on what's known as the Fraser Institute Mining Investment Attractiveness ranking, it's been moving up that ranking, and the last year it improved from 67th to 22nd, and that's all sort of the ranked countries that are considered mining jurisdictions around the world, and there's probably over almost 100 of them, but we're moving from 67th to 22nd in 1 year is just an indication of how much has improved in the country in terms of its both infrastructure, government support, and in terms of the discovery itself, just a property location. It is located sort of northern part of Guyana. If you can look in the upper left-hand screen of the picture here, northwest part of Guyana, and it sits west of the Essequibo River, which is the main river that splits the country sort of in two. But it's fairly close to infrastructure in terms of roads. There are roads that are public roads, both on the north and south side of our property boundary, and we've got a road access from the primary roads into our property already, and using that for exploration. So there is a good road infrastructure. We haven't got power infrastructure in the area, so those are some of the things we're still working on to look at. But in terms of locations, about 65 kilometers from the main largest town in the western part of the Essequibo, which is called Bardica, which has about 10,000 people. It's about 60 kilometers away from Bardica. And then about an hour's flight from Georgetown to the site. There isn't currently a runway on site, but there is one in Bardica that we can fly to and then drive from there into the site. So when you're looking at the actual prospecting license that we have, which we're 100% owners of the prospecting license, you can see on the right-hand side of the screen there. You can see the main structural feature that's shown there, and the main discovery that we have is a shear zone running at a contact between granites and volcanics, ultramafics and mafics volcanic units. And that shear zone is hosting our discovery, as well as most of the discoveries that are made so far to the north of us on what's called G2 Goldfields, which is another mining company that's been exploring the region. So between us and them, we have a shear zone that runs north, south, and then sort of swings to the west a little bit on G2 property. But the total kilometers on that is about 23 kilometers strike length. And we're exploring the bottom 6 kilometers of it. And G2 is exploring the 17 kilometers that are on their property. They're particularly focused on the contact along that strike that's close to our boundary, and we also are focused on that strike length closest to the boundary with G2 right now. So that's where most of the drilling activity is going on right now. And I'll talk a little bit more about other areas on both our project and theirs that are still being explored yet, and many targets, I think, on this particular strike of shear and other parts of the property. I think it's important to say that this is a very active alluvial mining area, and so there are artisanal miners active in the area. There are actually no artisanal miners on our property now since we've converted to a prospecting license. But there are artisanal miners to the north of us and around us. But the good news was that artisanal mining, which is mostly alluvial mining, was a good way to know where to go search for potential sources of gold for these alluvial activities that are going on, and that's essentially why we were able to target this area we had, because of the active alluvial activity immediately to the east and north of of the discovery that we have. And similarly, I think G2 Goldfields was targeting it on the basis of the alluvial activity that's surrounding the area. And it's important to note that alluvial activity, that artisanal mining is legal mining in Guyana. But Guyana has a process for legalizing the artisanal activity in the country, so it's well structured and monitored, and revenues flow from it into the government's revenues as well. So the announced resource we made in June of 23 was 2.4 million ounces of gold at 1.8 grams and 1.7 million ounces of 2 grams. Was obviously our very first resource. As very quickly from the time of discovery to that resource is quite extensive. It's 2 kilometers along strike. That's going down to a depth of almost 600 meters. And so it's quite a volume of rocks, about 70 meters on average thickness, with a sapper-like cover that runs about 60 to 100 meters thick, and a very high-grade portion of that deposit running through the center core of the discovery, which I'll talk a little bit more about. But so far, as of June 2023, with that announced resource, 58% of that resource is in indicated category, and the remainder in inferred. We've since subsequently drilled out most of the inferred, and we'll be announcing an updated resource estimate on the open pit, as well as the future underground potential in roughly the second quarter of this year. So there's an updated resource estimate coming out shortly on this. But so far you can see that's a pretty substantial sort of maiden resource estimate, and there is upside to that. In terms of the modeling, it's modeled in a way that is a sort of structured along a shear with a package of mineralized domains within it, separated by some waste in between. So we've modeled it that way, and it's very continuous from a grade predictability point of view. So what makes it unique is not a nuggety gold deposit at all. It's a gold deposit with pretty predictable sort of trends and direction in terms of gold mineralization, and so it allows for a fairly reasonably spaced drilling program to convert from discovery through to inferred and indicated and ultimately measured resources. And the spacing that we're drilling to get the indicated is to drill it to 40 meter spacing, and to get it to inferred, it's 80 meter spacing. So those are quite reasonable spacings, and which has allowed us to add ounces very quickly at a very low cost to this project. So then just looking at a cross section and looking at the pit shell, you can see that was used to constrain the resource. You can see that it's a very continuous trend along that shear, and it continues at depth below the pit. We are subsequently drilling out the depth extension of the pit below the 600 meter mark, down to 1 kilometer. We've drilled a hole down to 1 kilometer already, intersected continuity on that mineralization, and we're just filling in that area down to 1 kilometer now. And that'll be part of the new resource estimate update that we provide in the second quarter. So the characteristics of this is that the grade, as I mentioned earlier, that there's quite a large sapper-like cover on top of the deposit, which will make for a great sort of quick payback on the investments that would be made to develop it. And on top of that, there's this increasing grade with depth trend that you can see in these right two charts here on both indicated and inferred, particularly as the inferred is mostly the deeper material. You can see that it runs about 1.6 grams near the top of the deposit, and then by the time you get to the bottom of the pit, it's about 3 gram material. So that certainly bodes well for the underground potential. And Looking at it in long section, you can see that trend of the high grade. There's a high grade core that sits in the middle of what we call block 4, and that high grade trend continues down, and it's around 200 meters long strike, 200 to 400 meters long strike length, and it continues down at depth. So it's open still at depth. We have drilled holes as deep as a kilometer, but it's still open, and we're just doing as I said, the infill of this drilling right now to convert it to an inferred resource down to a kilometer. Just looking more broadly at the property itself, the Oco West discovery is up in the top right. The Oco West maiden resource estimate is in what we call blocks 1, 4, 5, and 6. Is what we've really been drilling over the last 2.5 years now. The Takatu zone is relatively unexplored. We've done a little bit of RC drilling to kind of see if we can identify any geochem anomalies or within the sort of saprolite cover. But we haven't done any substantial diamond drilling yet on it. And so that's what we're working on now, is to refine our targets along this Takatu zone to the south, along the same shear package for about 4 kilometers further south, and see if we can't find more of the same as what we've already discovered on the north zone. The north zone we call the Kairuni zone, the south zone we call the Takatu zone. So the Takatu is just starting to be targeted. We're doing mainly geophysics and soils work, soils geochem and IP and other ground mag as ways to identify those new targets along the southern extension of the shear zone. And then to the west of the shear, what's very obvious is there's a very large alluvial mining activity, which when you look at the flow of the rivers and the water, is that everything's flowing to the west and to the north in that direction. And when you vector back from the alluvial activity, it would appear that the source of the alluvial activity would be gold that's found somewhere in this, what we call brine zone area. So we've done a fair bit of geochem work now on that, and I've identified 2 main targets, although several smaller ones as well. One we call the High Road target, one we call the North Drive target. And those targets are being explored and drilled out to see what they are. So we did just some basic geophysics and geochem work, and now we're into follow-up diamond drilling in moving our drills to the North Drive target once they finish up on the Oco West discovery drilling and resource definition. So we have 6 drills running, diamond drills running, and 2 RC rigs, and most of those drills currently are focused on the resource definition drilling and deep extension drilling. When they're finished, which will be in this month, they'll start moving to the new targets that we have on the property. So there's the metallurgical work, just for those that are technically oriented around metallurgy. This is a very good result. We've got gold recovery of the fresh rock of around 94.4%, and the transition in saprolite over 96, 97.5 in saprolite. And flow sheet work, in terms of determining the design of the flow sheet for the project, it's pretty straightforward results, good results overall. But basically, it would indicate that we need to grind the material to about a P80 passing 75 microns. Gravity gold is quite recoverable in there, so there'll be a gravity circuit, which we think will recover gold in the range of 30 to 60% of the gold. There is some carbonaceous sediments, but the test work has confirmed no preg robbing from the carbonaceous sediments. The comminution work has indicated fairly medium hard rock with a bond rod mill work index of 16.7 and a ball mill work index of 14.1 kilowatt hours per ton. And then bronze abrasion of 0.132 for fresh rock. So kind of a medium hard rock, but not certainly overly hard and not too abrasive. So we would expect a reasonable cost on the power cost to grind the material down. And then we're still doing work on what is the optimum leaching, but currently CIL is be one of the CIL and CIP will both be looked at in the study to evaluate the best leaching results. But looks like sort of less than 48-hour residence time on the leaching, and as I said, very good recoveries at that level of leaching. So a number of value potential enhancements on the project are being looked at as part of the overall PEA study. One is the how we can maximize value through the early free dig saprolite. As I said, a very large saprolite deposit on top of the deposit. So it's free dig material, so it won't be any blasting, and you just dig the material up, put it through the mill. And if we can put it through at much higher volumes than once we have to put hard rock through, that would constrain the capacity of the plant. But with just primarily saprolite material going through, we think we can increase the throughput substantially, which will increase the ounces of gold produced early on in the sequence of mining to help quicker payback on the investment. Of course, we have this high-grade core in Block 4, which will be mined early in the sequence as much as possible, or concentrate on that to enhance the payback and the investment. And then we have very competent hanging wall and footwall rocks, granites on both the hanging wall and footwall sides, so pit slopes, optimizing the pit slopes and lowering the waste rock strip ratios best we can with the benefits of that. So there's a lot of geotechnical work supporting where we'll end up with the pit slope angles. And then optimizing the open pit and the underground mining transition and potential for early sequencing of the underground mining. So unusual in this project, maybe a little bit. Most mining projects would concentrate on obviously the open pit production early, and then if there was an underground potential, we'd add that towards the end of the life of the open pit. This one, there's some good logic to looking at bringing the underground in simultaneously with the open pit, maybe lagging a little bit behind the startup of the open pit, but lagging behind once, really because of the high early saprolite production and the high ounces profile. There's a bit of a lull as we move through the fresh rock part of the open pit, which starts off higher at a lower grade and then increases as we get depth. So it kind of creates this bowl-shaped profile to the ounces of the open pit. We can fill in some of that ounces with the underground and have a much more constant profile, but also at a higher profile of ounces overall. So the project combined, would be a bigger project with open pit and underground. And quick, the benefits of it would be, a steady state type of production profile for the ounces over the life of the mine, combining the open pit and the underground. So it's quite a nice opportunity, which we'll look at the trade-offs of benefits and the pros and cons of doing that in the PEA study itself. And the other opportunities are evaluating the power sources. We're looking at potentially finding a green energy source, and the one that looks to have some potential is what we call run-of-river hydro. And that's because we have major rivers running on either side of the property, fairly close to the property. And therefore, these rivers that are quite large on both sides of the property offer opportunities to evaluate this technology. It would be done as part of a PPA arrangement, so working with a third-party power provider to install they would install this run-of-river hydro technology in the river and operate and maintain it for us. And it could provide our power sourced at a set price agreed upon and at a capacity that we can agree on under the terms of some sort of a power purchase agreement. So they're well down the track with the study work on this. We're now into a full feasibility study, which should be completed in this quarter. And from there, we'll look at the commercial arrangements terms with them to see if it works for us and works for them. And if it does, we'll carry on from there to do some testing in the river to see that, make sure that the design of these concepts work properly. And then from there, if everything goes well, we would implement that in time for our startup of our operations. So that is one. If the default, the backup plan is heavy fuel generated power on site. So obviously a higher carbon emission type solution, but it is a viable solution and economic solution for us, but one that we'd prefer not to implement if we didn't have to. It may act as backup power, but not as a primary power source. There are other opportunities we're exploring, including the sale of our waste rock for aggregates, because there is a big market in the Caribbean for aggregates and riprap. So we're looking at that. And then full electrification and automation technologies, looking at what's possible in terms of both the open pit and the underground, as to minimizing our carbon footprint, but also creating a sort of a premium green gold product for the mine. And a number of strategic things we're considering. Obviously, the biggest strategic benefit of this is the rapid advancement of the Oco West project to production, which, as our industry is facing longer and longer timeframes to get projects from discovery to production. This is one where we're trying to take advantage of the good jurisdiction and the high quality project and the ability to move this quickly with the management team. So we are on that pace, exploring the new discoveries for increased scale. Of course, we're not only looking at land packages, our own property, but within and around the Oco West project, other sources to feed that potential project or feed the potential process plant with material for the long term as well. So there are a number of exploration projects or properties we're looking to acquire as part of our expansion of the area around Oco West. And then, of course, given that we're a junior explorer / developer now, and we have a very good project, I think it's attracting a lot of interest, of course. And so we're certainly looking at the strategic pathways to value, which of course could be ultimately go it alone, but also could be merging with other companies, or a joint venture, or even consider takeover offers in terms of options that might create value for shareholders going forward. As I said, the timelines, typical timelines from discovery to production now in the industry, running close to 16 years now on average for gold deposits. We're targeting 6 years. So certainly that's a significant improvement over the average in the industry today. That we're carrying a dual track strategy going forward, which is both moving the existing discovery down the path to development on a very fast pace, as well as exploring the remaining property and what's around us, and in terms of potential, as quickly as we can as well. So if we can add more to the scale of the project or the ounces that we can incorporate into the business plan or the mine plan, then we will do that. So it's a dual track strategy. We are spending on both fronts at the same time. And given we're financially in good shape, it allows us to do that. Certainly a big focus for the company is our focus on the ESG. We're in the Amazon rainforest, and it is an area that we want to protect and preserve as best we can. And so we're paying very much attention to our plans around protecting the rainforest and the environment and the flora and fauna in it. There's a lot of the main activities that are in this region that we are in, and it's within the rainforest, is artisanal mining, it's forestry activity, and obviously our footprint as a large-scale miner would be relatively small compared to those footprints that are active in the forestry and artisanal mining area. But we want to, as much as possible, replace, certainly offset any deforestation that we create as part of the activities we do, and reforest areas that are already devastated or barren as a result of other activities that have taken place in the past. So offsetting any particular net impact on the force. And hopefully we would actually have a positive impact with our activities. That's what we're trying for. And in protecting biodiversity, which is very important in this region as well. Those would be very much our focus, and then a number of other focuses around the social side to create employment opportunities, to create training opportunity, learning opportunities, help local businesses, protect and again employ the local indigenous peoples that are there are certainly a fair large indigenous communities nearby our project. So we want to employ as many of those people as we can and help those local communities to thrive and to benefit from the project. So the next steps that I touched on some of these already, but just so everyone's clear, we are completing the resource expansion program at depth right now to 1,000 meters. So adding an underground potential zone and putting it into an inferred category, and we'll release the resource estimate for that, as I said, early in the second quarter or late in the first quarter for the updated resource estimate. And the PEA, which would follow obviously that updated resource, would be released towards the end of the second quarter of this year. And then we'll continue the exploration on those projects to the Takatu and Bryan zones I mentioned earlier, and adding exploration projects both around Oco West and elsewhere in Guyana and Suriname. We're active on the project generation side as well, and we'll certainly be announcing anything that we discover on any of those projects. So advancing the permitting process is well in hand, with completion of the terms of reference for the ESIA, which should be coming in the next couple of weeks. And then we'll prepare the EIA submission, which we expect to submit in the fourth quarter of this year, and then look to get a response on that early in the new year, 25. And hopefully by early 25, we'll have both the main permits required to make a decision to go forward, as well as the feasibility study completed, and whatever financing arrangements we'll look to arrange for the project financing. And so all those things, if they come together in the first or second quarter of 25, would allow us to make a construction decision after that. And then, as I said, it's about an 18-month build, 18 months to 2-year build, so it would put us in production by 27. So, and just in terms of the share price performance and share ownership, certainly we had a very quick run up in the share price, and we were one of the top performing gold mining shares in 2022, particularly, and subsequently sort of languished. Our share prices languished a little bit, but it's probably typical of these following the Lausanne curve of where you are. I think the little different for us, though, is we're not stopping the exploration activity to advance the studies. We're actually continuing to explore at the same time. So we should see, if we make any major discoveries, some upside on that, as well as we'll de-risk the development side and move that project forward as fast as we can to become a cash flowing business. In terms of the share ownership, we got quite a large and a very good shareholder base in terms of institutional shareholders and strategic shareholders in the company. The largest shareholder is Dundee Resources at 14.8%, Condire at 9.2%, and La Mancha, which came in during our last financing, is at 8.3%. And Jupiter Barrick is another strategic in at 6.6%. And then a number of other institutions at major holdings. The management directors own 6.3%. So we're primarily institutionally and strategically held, with a smaller retail following. So I think that's pretty much all I wanted to share as a top end. I hope that's gives you a good overview of the company and where we're headed.
If you could just kind of walk through your career, because you've been been active in many different places and been successful and led companies through various stages. Can you kind of share some of your biggest victories and your career outline? It would be very interesting to hear.
Yeah, no, I spent with the Canadian major companies, the three big major Canadian companies, which would have been called Cominco, now Teck, Inco, now Vale, and Falconbridge, now Glencore. So those companies really allowed me to get a lot of experience, mainly technical and operating experience in those companies, and some development opportunities as well. But I was able to kind of work throughout all of Canada and mostly the largest underground mines in Canada. I probably worked at most of them, and some open pit mines as well. And then moving up into Dundee, I spent so that's 30 years with those companies, and those companies are great grooming grounds for young guys like me back then to learn so much, because they have such a depth of skills and experience within those companies. And then moving on to a smaller company called Dundee Precious Metals Gold, and working internationally for about 11 years after that. So, and then really that was where I got most of my more executive management experience in terms of working as CEO for most of those years with Dundee, COO for a while, and then operating some of their mines for a short while as well. So, but that was international gold experience. That was very good in countries like Bulgaria, where we took a sort of a Soviet era mine that was sort of fairly, I'll call it fairly run down, and had been around for about 60 years. But when we got it, it was in rough shape. Wasn't making money, and went bankrupt. Essentially, the company that held it before us was bankrupt, and we took that on. But we found that was a hugely high potential kind of opportunity for us. We didn't realize it when we acquired it, but when we got into it, it was a beautiful deposit. It was mining with the wrong mining method and the wrong approach to operating it. So we turned that all around, and we quadrupled its production, and we cut its costs in half, and we generated something. So it was making no money. We made $200 million in 2012 when we finally got it turned around and ramped up to where we wanted. We had to invest about 150 million in upgrading the infrastructure, doubling the size of the mill, adding a new ore handling system to the mine, changing the culture, setting a sort of a more digital mine. We probably became most well known at that mine for being one of the most digitally innovative mines in the world. We had more than 150 mining companies visit us in the course of those years I was there, looking at how we transformed that mine, because we were one of the first fully digitally connected mines underground, and we're using the technology to enhance our operating performance and efficiency. So we became one of the lowest cost underground mines, produced one of the best margins, and generated a lot of money over those years. So that was a mine that no one wanted. I think we picked it up for $1, and what we really wanted when we went into Bulgaria at that time was this open pit discovery, which had to be developed, which we later developed. Took us 10 or so years, almost 15 years to permit. And when we finally got it permitted, and we built it in 2018, 19, and we had it up and running in 2020. That was a great mine too, and took advantage of all the technology and innovation that we brought into the other mine, and so it's a very efficient mine. It's a 4-gram gold open pit that is also generating a lot of cash flow for the business there. And then a number of other countries. I worked in Armenia and Namibia. We had a smelter in Namibia. We had a mine in Armenia as well. So lots of, I'll say, different types of jurisdictions, very culturally different, very politically different, very challenging in many cases. But certainly Guyana, in comparison, is one of the nicest jurisdictions I've ever wanted to worked in my history, and that would probably include Canada, because things actually work fairly well in Guyana in terms of mining and permitting and so on. So, but it's been an exciting career for me, and still enjoying it after over 40 years of being in the business, and as always learning something new, and always finding new challenges. But at some point in time, I got to get out of the business, let the younger guys take over. But still fun.
Excellent. And something that we always like to ask, obviously, we see a strength for Reunion is the share register, of course. Management and directors owns, above 6%, let's say.
Yeah,
How
6%.
much exposure do you have personally to the share price out of that
Yeah,
management and board
I mean,
ownership?
I bought shares even before I joined the company. I liked the company and bought a number of shares. I continue to grow that position and, over time here. So that's public information what I own. Well, I own a lot of it in options now too, as stock options. But between the stock options and shares, yeah, I'm not sure what the percentage is, but it's growing, and I like the company, and I like the potential we have to develop. So
And then just looking at the share register, obviously you have some. It's very tightly held in terms of small retail ownership. But you have these, Dundee Resources, of course, that's a group that you've been associated with, owning 15%. You have Barrick that I assume from the Strategic Alliance before previously have this 7% ownership. And now you have La Mancha, and of course, G Mining is also partially held by La Mancha as well. So there's another group that has its foot through the door, I guess, into this district that we're talking about. So
yeah,
could you highlight, the strength of these shareholders, just for people that might not be aware about who these entities are?
Dundee Resources, who has had a long history of working with Reunion, so it's not that it goes back a long time. The parties, Jonathan Goodman's head of Dundee Resources and Dundee Corporation, was my previous boss. As when I joined Dundee Precious Metals, he was the CEO of Dundee Precious Metals and brought me in way back in 2008. Um, and so, yeah, they're essentially Dundee is a merchant bank. I'll say their interest is taking stakes in particularly in junior explorers slash developers. They like to buy early and get the upside, and they like to help. They bring a lot of technical knowledge and expertise to the table. So they help juniors, who at times don't have that kind of level of depth, help them to kind of move their projects along and get them explored and developed, and provide guidance to them and how best to do that and use the money efficiently. So he's been very successful. Jonathan did that same role before he became CEO of Dundee Precious Metals. When they called Dundee Precious Metals, was actually a closed-end investment fund, which he ran for 10 or 15 years prior to that. Prior to him starting up the operating company called Dundee Precious Metals, and so he was very successful in that. So he wants to go back to that model, and that's the model he's now running with Dundee Resources. So. But yeah, that's the background on them, and they're very supportive shareholders and very actively involved. And then if you talk about La Mancha, certainly they coming in at that in September was very key for us. We were obviously in the market to raise money was very difficult, and without a lead shareholder, and La Mancha brings again similarly a bit of pretty good technical depth to them, and their understanding, and they obviously have an investment thesis behind behind how they invest in companies. And Endeavor, I think, was their model of how they would demonstrate that, which is really to try to put together, first of all, to have a successful company with depth in it, to take on and grow quickly through acquisition, which Endeavor did. And they obviously helped in the financing side of that, but probably also on the technical side as well. So that is really where we see their strength, is they can certainly help us along on the financing and technical side of us as well. And their connection to G Mining as well. Obviously, they have a broader uh, plan in place, I'm sure, to how they can best do that in terms of that. So we keep in touch with them, and then Barrick, and Barrick has certainly been a key part of our history. We when we were struggling, they came in and provided financing. At one time, had 15 to 20% equity stake in Reunion. And then in 2019, we signed an alliance agreement with Barrick to essentially allow Barrick to become joint 50-50 partners in the advance of the exploration projects that they wish to participate in. So we would put our exploration projects in front of them to decide if they were interested in participating. If they were, they would fund 50% of that effort, and then they had an opportunity to earn into 70% if they would then advance it through feasibility study and so on. So that partnership, ran for 3 years. But after we discovered Oco, we didn't really put any emphasis on that project exploration generation activity, and they had decided early on not to participate in Oco West. So as a result, we ended up in the end of 22 with no projects in the joint venture or in the alliance agreement, and therefore we decided, well, we're only going to focus on Oco right now because we don't have money to do all the other stuff. So we notified them that we would terminate the agreement, and so that happened in end of 22, and then we did go through a bit of a tussle over that issue in terms of agreeing on how to settle that. But we did agree that how to settle all that at the end of last year, and so now that alliance agreement's no longer in force. But they're still a shareholder of the company, and a good shareholder.
So you don't suspect that there is any risk of them, divesting their position, and do you feel that they would kind of announce that?
I think given the asset, I can't say because I don't have they've never told us directly what their intentions are now following the termination of the alliance agreement. They haven't said what they plan to do in terms of their equity interests, but I know for a fact they're interested in the Shield. I know for a fact that they're active in the Guyana Shield in terms of their own exploration team. They have been involved in other projects like Troy Resources in terms of investments, and so I know that they would probably keep their eye on the Oco development opportunity in terms of whether they had an interest. It's a scale that they're looking for. Obviously, it would be a tier 1 asset, but we're thinking ultimately this is going to be a tier 1 asset when you look at the total camp, and so I think they've got their eye on it. I won't say what their plans are, but I would say they got their eye on it.
And then just to touch back on, La Mancha and G mining, and could you kind of highlight for those that do not know who like G mining and their respective industry, could you highlight their credibility and why it's so important that you have this partnership with them?
Yeah, first I'll say that the principles of G mining, if you really want to know the history, it goes back to really the Golden Star and Cambior relationship. So the principles, Cambior was really the G mining guy. So the CEO of Cambior back in the early days was Louis Gignac, who's now the principal of G mining, and so he was partnered with Dave Fennell under Golden Star. They did Roosevelt, they did Omai together. So Omai was the very first large scale gold mine in Guyana, and it ran in the 90s. So anyway, that long history of relationships. What ended up happening, as I mentioned earlier, was IAMGOLD bought out Cambior, which then the Roosevelt took over the Roosevelt mine. And the O mine was already shut down by then. But that allowed the Cambior team to reform under the name G Mining, and allowed David Fennell to reform his exploration team under the name Reunion Gold. So Golden Star became Reunion Gold, Cambior became G Mining. And then after that, they worked together, continued to work together. So there's a long history. Manganese project. There was other projects that were involved with Reunion that G Mining was involved in as well. So anyway, long history. But the thing about G Mining is their track record to successfully build projects in the tropical environments. They have a great track record. They're one of the few that has been consistently building projects, on budget, on schedule. And if you look at that, they split their company into two. They got G Mining Ventures, which is their operating company, and they got G Mining Services, which is their engineering, consulting, and construction build company. And so we entered into an agreement with them for they would become our partners on the Oco West project build. Now their track record as a build company, and an engineering and build company, subsequent to the experience they had with Omai and Rosabel, was very successful as well. So Fruta del Norte was they won the contract from Lundin to build Fruta del Norte. They won the contract to build a Marion project in Suriname for Newmont. They won the contract to build they're building their own project in Brazil called Tocantinzinho. So if you look at every one of those projects, then Tocantinzinho is the one under construction right now. Every one of those projects came in on or under budget and on or under schedule, and they ramped up on time or ahead of time. And so, if that's 100% success rate on builds going through that many builds, including Omai and Rosabel and those other three I just mentioned, they have a perfect track record. And I know why, and so I've spent a lot of time with these guys now. I fully understand why. They're very much have a model of how to do these things that's very well disciplined and defined, and they are very disciplined about the way they carry it out. So it's when you look at the projects that are failing to deliver, they get the numbers wrong. I mean, this isn't going to happen with a partner like G Mining because of the discipline and the skill set that we have in house with them to do it. So it takes the risk of the construction risk that you see with most projects. Not to say it eliminates it totally, but it certainly reduces the likelihood that you're going to see any major cost overrun or schedule problem or ramp up problem even.
Excellent. So, and you touched upon this previously as well, but Guyana as a mining jurisdiction, could you kind of succinctly describe, who operates here, the latest mine that was built in Guyana, just a general mining landscape in this country would be very interesting to hear about a bit more.
Yeah, I mean the sort of current major operating mine in Guyana is the Aurora mine, which was originally owned by Guyana Goldfields, and many would know the story of Guyana Goldfields and the Aurora mine, but it subsequently was sold to Zijin. So Zijin currently operates the Aurora mine. It was originally an open pit. It transitioned to underground several years ago. So when it was an open pit, it was running about 120,000 ounces a year or something like that. And it's now running about 80,000 ounces as an underground mine. Zijin runs that. I would, I'm not. It's a bit more opaque as to what's going on there now that it's owned by a Chinese company who doesn't necessarily, share a lot of details about what's happening on their site. But we're close to them in terms of location. And then there are a number of other discoveries, but the only other operating mine recently was the Troy Resources project, which had run its course essentially, and had some life left, but financially or economically couldn't make the remaining life of the mine work at the end. So they basically shut down. And I think the company is somewhat in bankruptcy. I don't know the details of that, but they did run for a number of years there in the country. And then Toro Paru, which is now owned by Aris Mining, was once owned by Gran Colombia before that. It was a project that was looking to get developed, and I think it's been put on hold. It's about a 7 million ounce copper gold project west of us on the western part of towards the border with Venezuela. That project there has been no decision to proceed ahead with it yet through Aris. So I don't know what their plans are there yet, but they're currently not actively advancing it. And other than that,
Okay,
there's
so
lots of other small project discoveries. The old Omai mines has been resurrected under Omai, which is a new junior explorer who's exploring the old Omai property, and I think they've found some underground potential there, and they're advancing that still in exploration. And Gold Source has the Eagle Mountain project, and that is I think about 2 million ounces, if I remember correctly, open pit potential project that I think they released a PEA on recently. So lots of active areas. A number of other explorers in the country as well. Barrick is in the country and others. So it's I think it's quite active in Guyana right now, and it's a large underexplored greenstone belt. And when you look at the alluvial mining footprint, if you ever fly over, you'll see there's a lot of gold, in alluvial form all over the place in the Amazon rainforest. But that means that there's likely a lot of gold in rock somewhere, in source rock somewhere in the country. So
fair to say, with the small population that Guyana has, with the oil success, and now maybe in the next decade, many new mines being built, it's going to be a rich country per capita. That's for sure.
it's going to be, as I said, in the top 30 GDP per capita. It was 170th GDP per capita before this all started. It was one of the poorest countries in the world. So yeah, it'll be one of the richest.
Lots of potential there. So and then local to the project, do you have any community? I mean, are there any established communities local to the project, or is it quite a distance?
Any what? Sorry, I missed that last piece.
Any local communities to the project?
Yeah, there's transient alluvial mining. I'll call them artisanal mining camps that support the local artisanal miners, but they tend to move around. There's one just to the north of us on the G2 property. It's a couple kilometers away, but it's maybe 100 people, and it tends to move with the mining activity from the alluvial miners. But other than that, if you look at there's nothing really immediately around. That's the closest property. There's a few artisanal camps a little further away, also, but not very close. And then the closest major community is Partica, which, as the crow flies, about 40 kilometers away. And then a bunch of smaller communities, mainly indigenous communities along the rivers that are nearby, but they're at least minimum 40 kilometers away. So nothing in the immediate area. We're not in a protected zone or anything. So it's from the point of view of concern, relocation of people or anything. There's really no issues there.
Excellent. And then I want to switch over now to kind of focusing in on the some of the details of advancing Oco West in the next year and into construction decisions. So if we start off with the kind of baseline, which is the budget, what cash position approximately, kind of ballpark, will you sit at once the PEA and the updated mineral resource will have been released? Where will you be at that point in terms of cash?
I mean, I can't. I can give you a number, but it's a rough number. But as I said, we had 82 million in cash at the end of the third quarter. The other thing to keep in mind is we have warrants that are outstanding, which those warrants, which if they're in the money by the time they expire, before they expire, they would bring in another 25 million too. So you can, for argument's sake, look at it as over $100 million in sort of cash position at this stage, if you included that. And that as I say, those warrants expire in July of this year. But so if that 100 million will carry us through in all the activities, including PEA, we're not planning to do a full feasibility. We're doing trade-off studies, but not releasing a full pre-feasibility. We're jumping right into the fees after the PEA, because the PEA is actually done to a level of a pre-fees. It's quite detailed, and much like G Mining's nature. Nothing's done by them at a very, we'll call it back of the envelope type exercise. Everything's done to a very thorough level. So we, we'll move to a fees, and that will carry us through those stages, including permitting, fees, and the money we plan to spend on exploration currently, and the definition drilling activities we have to do to convert everything into the right category, which will be indicated or measured for the feasibility, and underground and open pit. So all of that is covered by that amount of money. So if we didn't take the warrants in, the 25 billion warrants in for whatever reasons, we would definitely not be able to cover all those activities to the end. So I'm saying we're financed through first quarter 25 with all the activities we've got planned. So, and that's with those warrants coming in.
So who are who holds the bulk of the warrants?
Well, it's part of the financing we did in 2022, and about mid-year 2022, we did a financing. I think it was around 39 million. I wasn't around then, so I don't fully remember who came in, but it was a bought deal financing. So I don't know who exactly holds them, but it's mostly that institutional base that I showed you earlier on the chart. They were all those institutional guys that were in that chart were in on that financing. So I don't know who else on top of that, but anyways, it's that shareholder base that's carried the company through since its initial discovery. I've stuck with it. So to maintain their.
So I mean, it sounds like you feel like quite confident that they will exercise unanimously.
Yeah, we're very confident. I mean, if we didn't bring the warrants in, I would say we'll be looking to top up a little bit of financing, but it's not very much. So,
No.
I mean, we're very lucky to be in the kind of shape we're in. I think in this market where juniors are struggling to raise any money to advance their projects, we've been very lucky. And I think the luck comes obviously because we have a high quality project and probably a good jurisdiction and probably believable management capability to navigate this. So I think those three things investors tend to look very closely at those three things before they make their decisions. So,
and I take it. Would you be able to do kind of a rough breakdown on the spend so people get a sense of? I mean, I think infill drilling will be the
I can give you rough ideas. The drilling, which is going to be probably the biggest component. It is the biggest component. So we've got. So we, if you look at what we've drilled so far on that deposit, it's probably 160,000 meters or something like that. We'll drill another 65,000 meters in 2024, and that will allow us to the bulk of that will be the resource definition drilling to convert the underground potential to indicated, to finish off converting the open pit potential to indicated or measured. So we'll have all of that material in a position by the time we by the time we do the PEA work on the mine plan. All of that will be with the PEA, we won't be all PEA. Sorry, for the for the feasibility, we'll have all that converted into indicated and measured through the course of this year. So that's the bulk of it. It's probably about 2/3 of that 65 million is that resource definition, and then the other 1/3 of it is the exploration and condemnation work that we're doing. So on the property, exploration and condemnation work. So that accounts for probably 2/3 of our budget, or maybe about 2/3 of the budget, and then the rest is the advance of the engineering, the studies, the permitting, and all of that work. So that would be the majority of that would carry us through to, as I said, I look at this as carrying us through to construction decision. That budget which is take us all the way through this year and into the first quarter of next year. and partially in the second quarter, will be everything we have to spend to do the permits, the studies, and the engineering completion of the feasibility study, and the drilling that we need to do, and including our exploration activity on the property. All of that will come in that total budget of around 100 plus million for this year and the first quarter of next year.
When do you expect to kind of release the black and white figures for this to the market, the budget to construction, as you talk about it now?
What type of figure? Sorry, I missed that. I missed that.
When do you expect to kind of release this in black and white, i.e. writing, so like final figures, budget allocations and stuff like this to the market?
Final figures on the spend plan, or final figures
carrying through to construction decision.
Yeah, like some of it'll come mostly in the PEA, because the PEA will show the remaining plan that we have to the end of the to construction decision, because the next step is the feasibility study. So it'll tell you exactly what we're planning to do. I mean, we can high level, we can certainly guide that information now. It's nothing. We already struck the budgets and know what we're going to spend on what things over the course of time. The only thing that could change if we found a new discovery on the property or off the property nearby, we might have to expand the drilling plans and to start to drill those deposits out. In which case, which is a good problem to have, but we would probably also need to look for some additional funding for those. So. And early works is the only other thing that we're contemplating early works work to make sure that we can meet the timelines we set out on the project. So I don't think the early works is not going to be a big number though. So it'd probably be able to carry that within the budget that we have now.
And in terms of expanding the kind of the drilling plan significantly, that would have to be, you would have to be, I take it, see strong indication of a fairly high grade, close to surface open pit in trucking distance to the plan.
Right. I mean, the interesting part is G2 obviously is immediately adjacent to us. I mean, they're not likely a standalone project, at least not at this stage. So, I mean, the logic is we wouldn't build two mills side by each. So I think somewhere along the line, this is all going to get consolidated somehow. I can't predict how it's going to get consolidated, but it'll likely get consolidated as one major discovery along a 20-kilometer strike length, and there's so much more to explore. Between the combined companies, we only explored 4.5 kilometers of a 23-kilometer strike length. That's how much we've explored so far. So it tells you that there's going to be a lot more yet to find, but in the end, I think the decision to how this unfolds in terms of how you pull it all together as one, I can't really say, but I think both companies are realizing that that's going to happen at some point. So
and we'll return to kind of the G2 aspect potentially in a little bit here. In terms of the exploration drilling, how many meters have you budgeted for? Just exploration, discovery regionally.
Well, exploration about 25,000 meters of mainly RC drilling and some diamond drilling. Yes, that's the exploration portion.
And then just to clarify, so how much of the mineral resource, that will be outlined in the updated MRE, which will be the basis for the PEA, will be able to be infill drilled to make it into the mine life of the DFS? Approximately.
How much of the resource? So the open pit, almost all will be in the. Well, when you say that, you mean into inferred or to indicated?
Into sufficient confidence to be part of the mine life in the DFS.
Well, by definition, under the 4301, for purposes of we put a PAA out versus some of the material in the PEA will be inferred, of course, on the underground portion, but the open pit, by the time we release the PEA, most of it's going to be indicated, very little inferred, and then for the feasibility study, we'll convert everything in the open pit to some indicated or better. and everything in the underground down to a kilometer. It's probably not down to a kilometer, but down to maybe 800 meters will be into indicated in the underground by the time we roll the feasibility study out.
I'm Keith Boyle. I'm the Chief Operating Officer for Reunion Gold. I'm a mining engineer by training, and I've been in the business nearly 40 years now. I've worked from the high Arctic to the highlands of Papua New Guinea and a lot of places in between. And so I've focused a lot on project development and operations of both open pit and undergrounds through that career. And this one here, I'm quite excited to be a part of.
Excellent. So let's just give people a sense of Oco West and the economics that it's likely to, very strong economics that we're likely to see in the project. And of course, you guys are releasing the PEA within probably Q1, it's guiding for. But let's speak from a hypothetical point of view, what do you think that the processing capacity is likely to be at once you release the DFS? What would be the range you think would be appropriate for the mineral inventory?
So I'll go back and I'll say that we announced our mineral resource of last year in June. That had in both categories measured and indicated 4.2 million ounces of somewhere just shy of 2 grams. And so that was all contained within a pit shell that was run. The economics were run at 60, or the shell rather was run at $1,650 gold. And that optimization and typical, I would say typical operating costs of $275 a ton for mining, just over $12 a ton for processing, and somewhere around $5 a ton for the G&A. So, and those were, call them benchmarks that our engineering firm knows that those are pretty standard for that kind and size of deposit here in a place like Guyana. And so in the back, we've been working hard at pulling together a design, and our drilling has continued in that area where we've defined within that shell. And of course, as we've announced, it also continues below the pit. It's a good problem to have. And so we delayed our PEA from the end of 23 to the second quarter of 24. And during that time, we've been drilling at depth. We've been announcing some good results. That zone continues quite strongly at depth. And so we're now looking at a combined open pit underground that, should probably be in the range, I would say, of somewhere between 15 to 20,000 tons a day total, that range. And so with the optimization that we'll do with the underground drilling that's been completed, we're going to be able to look at something of that range. And the underground, well, we're still in early days of design, so it's pretty tough to say that. What sort of range of production are we looking at? 2,500 to 4,000 tons a day ish seems to be somewhere where we can settle our hats on around that.
So, I mean, of course, it's very interesting to think of them, and it's many things to look at. You could optimize for payback, you could optimize for scale. It depends on what you kind of want to go for. But if we start with, I mean, if you were to just have a build Capex where you would not do the underground development right away, where do you think that would kind of come in at? And it depends on how you design the plant, if it's going to be a 15K or if it's going to be a 20K per day kind of size facility. But what kind of range do you think you would be contemplating, and do you think it will be phased as well, to phase in expansion and then underground feed as well?
Best way to describe that is with the PEA, we're going to choose a base case, and then we're in parallel doing trade-off studies to see what is the best way to phase this. You can look at, if you will, a small pit that takes out the saprolite and transition, which is about 15% of that current resource that we have. And so 15% of those ounces, you're talking 500,000 to 600,000 ounces is what we're looking at in terms of that initial piece. Well, one of the ways you look at it is you can say, we'll take that out first, use that and expand the mill as the cash flow is coming in, and then stage it to a larger pit, and then we can stage it to an underground. And that's probably the least capital burden from that perspective, and wouldn't require us to go to the market and raise a lot of equity out the gate in order to support whatever debt you could raise. Having said that, the best NPV will be to have all the positive cash flow up front, regardless of capital size. Where we'll sit, we don't know that yet. We're literally in the midst of doing the work. I'd love to give you ranges on that, but I just wouldn't feel comfortable to give you something. I just don't know what that answer is.
So I guess what we could try to do is, if you were to go slim, let's say let's say it was a super tough capital market, you would have to do it yourself. You would have to really min it and do the saprolite, as you say, first, kind of a bootstrap approach, or how you want to call it. What would that capex be? And then if you would go all out, maybe a major would acquire you, how would they consider deciding the mill, so we can give a sense of what the capex could range from?
Yeah, I don't have a good feel for the small project, because we literally are just getting into that number.
Right.
We've seen some analysts come out with some numbers that I'll call them benchmark numbers that many others have used in the past. And so what I can easily, say that they're not far off when it comes to the size of project we're talking about, in the 700-ish range from an overall project perspective. So that to me, that's a decent range to think of when you're looking at the overall project.
Yeah, so it's,
and we've still got optimization. We've still got we've still got lots to optimize on, but like I said, the analysts, they've seen enough of these projects to be able to zero in pretty quickly on what that might look like.
Exactly. Okay, so that gives people a sense. It sounds like you're able to adapt. You're able to unlock this ore body in many different situations, depending on who it is that's gonna actually do it. And of course, it could be you, it could be someone else. What do you have a sense of? Just the underground development component. Do you think it's likely that would be done up front, or would it be phased in? And do you have a sense of what kind of costs would be associated upfront, kind of capital costs with just developing underground? Might be too early, but to even say.
It is too early, just given that we're just getting the last of the drill holes in. So we've done, we've done some preliminary design work to see what that might look like. We've looked at different access options, but suffice to say that for us, the trucking option up a ramp is the lowest capex option, as opposed to a shaft or a conveyor. That's a lot of money up front, and so it's still really early days to see what that will entail. The nice thing about it is that when we're looking at what our options are for the underground, there's to the south, there are some zones. So we've got the high grade zone that goes below the main pit, but there are some zones to the south that are higher up in the stratigraphy that the pit doesn't capture, or they don't drive down on. And so we're with with the structural geology work that Justin and his team are doing right now. They're trying to get a better understanding of what is that mineralized system that these structures are controlling in order to hopefully provide for more underground feed for what'll be a substantial pit.
Yeah, so I guess it could be useful to kind of relate let's say a 15,000 ton per day mill design, and let's just look at the open pit. Let's just think that it's kind of similar to what the current how the current open pit is thought of. Maybe the pit shell doesn't increase a lot in terms of size. What kind of production profile would that relate to? I mean, obviously we can do the math quickly, approximately, but what do you think it would look like?
Yeah, a pit. Based on the current resource, a pit of somewhere around the 14,000 ton a day range, 5 to 5.5 million ton a year is something that I think is quite doable. With what we've got.
Right, and then the average head grade you expect to be, and obviously the mine, this scheduling of the mine has not been even close to finalized yet. But do you have some advantages where you can get some higher grade to pay back quicker, or is there some clear opportunities?
Well, when you look at the mineral resource, we've got when you look at the resource as a whole, it's this big plywood sheet with a high grade core that plunges, and on either side of this core along this sheet is where the grade goes down. So, and that high grade core just gets better with depth. So the lower grade overall in the pit, because you're mining more of that plywood sheet as you go down, you'll get a lower grade up front. But the nice thing is you're going to get more tons through the mill because you don't have to crush and grind the saprolite in the transition. So there is that upfront increase in production beyond the 5 million ton a year, 5.5 million ton a year. You know, we're going to design a plant that can handle a higher throughput without necessarily putting in all the big dollars for the crushing and grinding. And so we'll get a bit of a bump in production at the front end, and then it'll come down, but then it'll go straight back up again with when you're looking at the pit, it'll go straight back up again because of that high grade core at the very bottom. That's what you'll be mining. That's the only thing you'll be mining. So the average grade, right now we've got somewhere around 1.9 as a resource. You have to dilute it. Your mining will dilute it. So somewhere in the 1.7, 1.8 range, I would suspect is something reasonable when it comes to that.
Yeah, so kind of the production profile, I guess, would range between 200,000 to 300,000 ounces per year or something like this. It sounds like 1.9, 5-6 million tons per day or tons per year. Doing the math on the fly.
Yeah, I mean, you can say somewhere around 250 to 350 would be a range you'd look at, and then you'd put a underground on top of that.
Exactly.
Depending on the grade that you end up with.
And underground is fairly likely to be phased in, probably.
Again, I don't know. Our base case, it'll depend on I'll call it an executive decision as to how we want to look at the capital, the front end. How does it impact the NPV? And what you don't want is a tail sticking out from an underground without the open pit and the scale.
Exactly.
Because you won't be able to mine the underground on its own with a mill that size. So that too has to be considered.
And to further complicate that decision is obviously the strategic potential in the region to combine them and find
more surface material. Absolutely.
Exactly.
Yeah. So it's all of those balls right now, and everybody wants an answer for everybody wants the answer before we've had the time to give to do the work. So
We'll return to it later this year, I'm sure. Since you're moving so fast, you're going to get through
Yeah.
the PEA and PFS quickly here. So it's
Yeah.
great. So, and to give a sense on, now we have a sense of the kind of the Capex-ish range, and we have a sense of the production profile, more or less. And the costs, I mean, what do you generally see? You have these quotes, you quoted previously what you had in the resource, definition of the resource.
Yeah.
Do you think that will be consistent or?
Yeah, consistent, pretty consistent. For open pit mining, we're actually seeing better costs than what we had assumed in our optimization now that we've done more work. So we'll reflect that in the update, or the PEA rather. And as far as the underground goes, well, we're benchmarking right now to see what an underground would look like. We're looking at, fairly decent sized underground when it comes to what I'll call just a vein deposit, albeit a wide zone. And so, in the low 50s wouldn't surprise me as an output.
In the low 50s, would be solely
For
for
mining.
or
For
mining?
For mining,
yeah. And obviously everything else would be identical.
Processing and G&A on top of that.
Exactly. So yeah, that's, and obviously we don't know exactly now, but the NSR of the rock underground would obviously be a lot higher. Most likely, it sounds like the margin probably will be higher for the underground material, right? Fair to say.
Yeah. Again, the margin. I mean, from a pit perspective, the cutoff grade in the pit somewhere around 0.3, cutoff grade in the underground somewhere around 1.5 to 1.7, kind of a range. So you kind of do the math on what that looks.
Let's see the resource first, I guess.
Let's see what it looks like. Yeah.
Exactly. No, but okay, so that's interesting. I mean, with the scale, with the quality of the open pit and the potential of the underground, this should be a low cost project. If you look at per ounce costs, it's going to be very good.
Yeah, it should be. It should be quite good actually.
Yeah. You do expect it? Would it get into first quartile, or would it be somewhere in between first and second?
I'll tap out on that one. I haven't even looked yet.
Okay. I would guess, just doing some napkin calculations, I mean, I would feel confident that it would be below $1,000 all in, at least.
It'll be in that range.
Yeah. And then I guess I would like to ask, just some general questions, with access to manpower and stuff like this. Obviously, you guys have geomining that's supporting you through the study phases and also through the build phase.
Yeah.
But what does labor, what once in operation look like in Guyana? Could you give a sense of labor, water and power and these basics?
So, in terms of people, there are what I've noticed is that with the history of mining starting back into the early 90s that Cambior had here with Oh My Gold Mines moving forward. There has, and the bauxite mine over in Linden. So there's been quite a history where a number of operators, maintenance people, that's very. There are a number of people. Aurora Gold Mines are operating now, and so what we're finding is that there's a lot of interest in people moving closer to home. And we just happen to be, in the middle where a lot of the people are living, and they're going away to work and they want to move closer to home. Even though we'll have a camp, they'll be closer to home. So, and quite interested in the project. I suspect we are setting up our training programs in order to properly have the proper training for people and localize the jobs. But we are finding as well that even the Guyanese expats that are out that have this experience but have moved on into Africa, into the US, into Canada, are calling us now and interested in positions at the project. So, if I were to hazard a guess, I would say, we're probably 60 to 70% good. With the last bit, we'll find out this year as we do job fairs and see who's really out there.
Exactly, because I mean, Guyana is population of Guyana is like 600,000 people, right? Total.
It's about 800, and it's grown a little bit, but about 800, 850. Yeah.
Exactly. So yeah, but obviously it's a mining country relative to its size for sure. So
Mm-hmm.
it sounds feasible.
Yep.
And obviously you have some time to work on
that. I guess the other thing to consider is that there's a lot of off-the-shelf technology now that helps you, that helps you support a lot of the positions and a lot of people that may be new to the position but can have support in behind. And so we're really seriously looking at those technologies in order to implement a smoother, call it, transition with localized workforce.
When do you expect that to be like really ramped up? Because you guys will be at a stage, I mean, this time next year, you're going to be close to a construction decision, right? To actually start building. At that point, most likely G Mining is going to pull in their team and get it built.
Yep.
And when is, serious programs going to get, started, and you're actually going to, I guess, I mean, obviously you're hiring people before the mine is going to be completely built. So when do you expect that to kind of take place?
So our objective is that we want to start, we've already signed a memorandum of understanding with the Board of Industrial Trade, which is a unit of the Ministry of Labor here in Guyana, to put on some training for some trades locally in Bardica. And so we're looking at hopefully getting something started, I would say, starting in the second half of this year. What we want to make sure of is that when somebody goes in for training, that when they're finished, we've got a job for them. That's the balancing act we're doing now. We don't want to just train people and then whoop, off they go to another job. And so, as you mentioned, we're looking at making a construction decision by mid next year in order to ramp up our construction. G Mining, they know how to do this. They've done it here in country. And so what we want to make sure is that we've got people to start feeding into that. And then our workforce will come from the construction workers that we do hire.
So I guess it would be useful to understand, I mean, what's the distance to access power, sufficient power to run the operations on site?
Power, our base case power will be fuel oil gensets.
Okay.
And so we have the option. We can put them on site, or there's a 40 kilometers away, there's a wharf that we're looking at as part of the logistics of the project to import our materials. And so what we're looking at as a base case is really just putting the gensets there so we don't have to haul that fuel on the road to the site. And so we'll build a power line to the site in order to bring the power there. What that does, though, is in parallel, we have a group called InStream Energy, and they are investigating hydrokinetic run-of-river power. And our power line would go quite close to where they're investigating adding that green energy on. And so they're doing their studies now, their feasibility study, to see just how much power they could provide to the project, green power to the project. So again, more jobs, more work that's happening in parallel, but we're quite excited to see what it is they can deliver as far as green energy.
So when do you think that could be crystallized? Because that could be a big savings opportunity for you guys if that were to take place. It sounds like, at least. Would you be a direct investor to make that happen potentially?
No, they what we would do is sign a purchase power agreement with them just to deliver power at the end of a cable. And it would be up to them to find the financing and put it in place, just like hydro would in Canada or anywhere else.
Right, but realistically, it's not something that you can rely on because you're probably moving faster.
The risk of it for us at this stage of the game would be too high. So we would have to put in the power sufficient to operate independently, and then once it was proven, once it was connected and they deliver the power to us, well, then we could just start turning off the gen sets and have green power instead of burning fuel.
And I take it, and as I ask you about permitting as well, but with water, it's tropical environment, so there's a water surplus. I take it there's no issues with accessing water.
Yeah, no issues with water. We'll have a positive water balance, so there will be water discharge throughout the year, in particular during the rainy seasons. So we'll have to make sure the water quality, of course, is to the right standards and before discharge. But the water isn't the issue.
And then, I mean, you guys have a very, very quick timeline, and you're moving fast towards a construction decision. And during this period, when you're doing the PEA, PFS, DFS within almost a 1-year time frame, you also have to get this thing fully permitted. Can you walk through the entire permitting process in Guyana and tell us where you are at and what remains for you guys and the timing?
Sure. So the permitting in Guyana is really not dissimilar to anywhere else, really. It follows the same general path. So you start with the environmental impact assessment before you get, I'll call it, the technical permits to be able to start your work. And the impact assessment has the phases of, first you do the baseline work to understand what you have. We're just finishing our baseline data work now. The reports are being written. And we've done two phases, so 2 years of baseline work with both a wet and dry season, a set of measurements. So that's happening now. We submitted our application for an environmental assessment back in September. And since September, we've been working with the EPA and identify a major consultant to complete the EIA. And we're now finalizing the terms of reference for that EIA. And so we'll get the terms of reference, call it in this quarter, by the end of the quarter. And so we'll be in a position to compile our impact assessment for, call it, the next 2 quarters, so we can submit our impact assessment in the 4th quarter. And it's really consistent here. It takes about 6 months, including public consultation, in order to get then your environmental permit. So we expect our environmental permit, towards the end of the 1st quarter, beginning of the 2nd quarter of 25. So we'll be in a position then to get, call it, the technical permits well in advance of when we need them during the construction. So it's a pretty difficult process. And the nice thing about it is the country wants the project, wants the jobs in the region that we happen to be. And so we're getting fantastic support, all the way up to the president. It's quite astounding to see what the good support is for the work is.
So this timeline works out to get the EIA beginning of Q2 next year. What the small steps to be fully done with all the technical permits and stuff.
That part after the EIA, it's another 45 to 60 days.
Okay, and that's What's being done in that time frame?
Well, it's the detailed permits around the permit to take water. So for us during the EIA, we're going to detail out exactly what that means. And so the parallel that I use all the time is when you want to build a building, you first have to get it zoned appropriately. And then you can go in and you can get your permits for the electrical, the plumbing, because there are standards that you specifically have to meet. And so provided that those standards in taking water are met and the conditions within the environmental impact assessment permit, we get them. And those get done, most of them get done within a month. But I would say 45 to 60 days is a comfortable amount of time.
So to finance, I mean, the EIA is what you would need as a prerequisite. You don't
It's
need
the EIA. It's the EIA. Once we get that piece, the other permits will, because we're doing most of the work for those other permits anyway. We're discussing the same topics with the agencies that'll be issuing those other permits.
Excellent. And is this entire process federal in Guyana, or is anything local?
It's all federal.
Yeah.
Yep.
Yep.
Yeah. It's all federal.
Okay. And then finally, I would like to ask you about the metallurgy generally, because obviously you're moving to DFS quickly. So to get the metallurgy to that level of required security or confidence, what kind of work would you guys have to do, and what do you expect to change from the current recoveries that you're estimating for Oco West?
So we did a fairly comprehensive metallurgical test work program back May through August of last year, and I'll reference it as it was a PFS level program in order to be able to complete whatever trade-off studies we would need moving into a feasibility. And those defined recoveries that are, well within the range of what other mines in the Guyana Shield have seen every time that they've done this test work. It's a fairly simple. It's a simple metallurgy where there's good gravity gold recovery. Somewhere, call it 20 to I think 65% recovery gravity gold. And then in the leach circuit, it just picks up, and it's a fine grain gold, and so it leaches out quite good. We're looking at in the fresh rock right now. We've assumed a 92.5% recovery for the open pit portion, but given that the underground grade is higher than the open pit on average, 75% higher in general, you would expect that those recoveries will bump up a little bit with the higher grade. So we'll see what comes out. We're currently just now scoping out the next detailed program to test all over the zone for the variability, and more detailed for plant design purposes.
Okay, so to get it to the DFS level, that's work that you're starting now. But this program, May to August last year, did that include? I mean, I assume it didn't include the underground as well, because drilling wasn't done.
No, it didn't. It didn't assume an underground, but we did have a few holes in that high grade core, and we're not expecting the high grade core to change metallurgically on the way down. So part of this next program will test that, of course, but it's pretty consistent through that high grade core.
When do you think the kind of the DFS required level of met work will be done?
We're looking at getting that complete by July.
Okay.
Yeah. So our PEA, we're looking at announcing end of June, and the FS, the feasibility study, will move right into the feasibility study in July. So all the trade-offs, all the design work, all the work that is required to support a feasibility study, we're looking to get completed by then.
My name is Justin Venatorn. I'm the VP Exploration for Reunion Gold. I've been started working with Reunion back in 2019, and before that, quite extensively with the same management group, all the way from Eastern Europe through to North America, and then in the Guyana Shield. So my time with Reunion's taken me through the projects that we originally had, and still have some of these in French Guyana, and then working extensively in Guyana on a number of projects that resulted at the end of the day in the discovery and the work that we've done now at the Oco West project, located about 100 kilometers west of Georgetown. Okay, so on the screen here, what we're looking at is the geology map of our Oco West project. Our camp is located here in the northeastern corner of the property. And you can see here from all the color locations where the majority of the drilling has taken place over the last couple of years. So we have been focusing primarily on this contact zone between a very large granitic batholith to the east, what's shown here in pink on the east of the permit, and the sedimentary volcaniclastic units of rocks that are sitting alongside that contact. And then gradually over the last year, we started to look more at the western part of the project, over in the central zone. We've done some preliminary test work, and we're starting to look at other targets that are developing in this western part of the property. What I quite like about this imagery is in the background here, you can see the LiDAR imagery that everything's being draped on top of. And you can see the extent of alluvial workings that really lead up into this zone. So all these small boxes that you see are historic alluvial workings that were mined, probably about 10, 20 years ago, where alluvial miners came in and reworked the sediments that have been derived from where the Oco West discovery is and elsewhere in the permit. And it's been mined for gold. What we're fortunate with here at Oco West is that the mining stopped only in the alluvial, so they never went actually into the saprolite. So we have a very competent package of 80-meter thick saprolite that's been preserved within that volcanic package, hosting gold mineralization. So what I thought I'd do is just walk through the geology, starting out at surface, and then just explaining how this looks. We go beneath the surface and look at the drilling results. So again, we've got we're looking towards the southwest now. So we've got the granite batholith here in the west, volcanic package of volcaniclastics and sediments. And then we have got what we call our footwall granite, another granitic unit or possibly a faulted off piece of the main granite that has wedged the sediments in between the two granite bodies. And then to the west of that, we have a more mafic unit of volcanics, and then we're back into more of an intercalated package of sediments, volcaniclastics, and possibly some other intrusions out in the west of the permit. So the mineralization we're looking at and the resources we put out extend over about 2 kilometers, running from the very northern tip of our project down to the south here. We refer to these as a number of blocks. So we have block 1, which is really abutting the permit boundary in the north. Block 4, which is the main zone of high-grade mineralization, and then blocks 5 and 6 as we go further south. So in 3D, the mineralization effectively looks like this. We have block 4 extending down now. We've drilled this to about 1 kilometer down dip, and we're busy filling in that drilling to be able to put all that underground material into a new resource as well. Okay, so we look at a little bit of a cut of the mineralization and how the resource model looks. What we see here as we go beneath the surface is you see the resource model, which is constrained by the mineral resource estimate pit. That goes down to about 600 meters depth. And then you can see here in the background what we usually show in a lot of our long sections that we release is a bit of a grade thickness plot to really indicate where the higher grade and higher thickness portions of the mineralization sits. And you can see quite clearly how that extends in quite a steep northerly dip beneath the current MRE pit. And that is really the focus at the moment of infilling this area to sufficient drill density for an inferred, what we hope will be an inferred resource classification. And then our plan for later in the year will be to continue upgrading that to an indicated classified resource as we fill that into even higher drill density. So our drill density for inferred resources is about, sorry, yeah.
Just for reference here, to remind everyone, I think Rick mentioned this previously, but what's the pit on the screen? How deep is that pit extending currently?
So the bottom of this pit is about 600 meters. And then the deepest drill hole we have so far is about 1,000 meters down dip of continuous mineralization. And you know, what we're fortunate in seeing here is really that the mineralization is very continuous. We have a number of domains within the resource. The two thickest of those domains are really the lower two, what we call our lower deformation zone and our zone 2 domain. And I'll show a section of that in a second where we can see how that looks in cross section and how you can see how that continues right down to depth. Okay, so this is really how the resource looks. What I might do quickly is I'll just turn that transparency off, so this might be a little bit of a better view of that. This is the existing resource, and what we're looking at now is really continuing that resource at depth, although obviously the grade for that underground resource will be slightly different as we look at underground mining parameters rather than just the open pit.
Can we briefly talk about that? So just the nature of the mineralization. So what's the kind of the controlling factor contributing to grade increasing at depth? And do you have any analogous ideas of, you know, an idea of how deep it may extend and when does it start to drop off? Can you, like, what's the mineralizing event and what's the reason for it?
Okay, so if we look at this at the same what we were just discussing in long section, if we look at that in cross section, we've again got the same geology. We've got what we refer to as our hanging wall granite. That's the large granite batholith to the east. We've got our package of sediments and volcanic clastics that are sitting here in between these two granite bodies, and then we have our footwall granite here on the west, so sitting right at the base of the mineralization, and then our mafic volcanics that we've modeled out to the west, and then further west we have the additional packages of volcanic plastics and sediments as well. But just focusing on the resource itself, so this here shows you the block model. This is about 600 meters depth to the base of the pit. You can see here in the model how we've got a number of quite discrete domains that have been modeled out, sitting both within the sediments and the volcanic clastics. There doesn't seem to be a particularly high preference for one or the other when it comes to the mineralization. The controls for the mineralization are really associated with the main shear zone, which runs along the top of this footwall granite, and that's where we see the majority of the high grade. So the high grade that we're chasing at depth is really this lower package of rocks here, which we see continuing down, and you can see quite clearly in some of the significant interval intersections as we go down to a kilometer down dip. So that lower zone of mineralization is about up to about 40 meters thick, and we're basically looking at higher grades that would then be amenable to underground mining. So that's all going to be part of the upcoming PEA. We're looking at how do we combine the open pit, where we're looking at a lower cutoff of about somewhere from about 0.3, 0.35 grams per ton, depending on the domain we're sitting in, to an underground grade where we're probably looking at a gram and a half as a cutoff, and therefore an associated 3+ gram underground. So those are the kind of grades we're looking at. So far we see this as a very continuous body of mineralization, and so this 40-meter thickness seems to continue quite nicely down to depth, and we expect it to continue even deeper as well. Obviously, at some point we have to make a decision about how deep do we really keep drilling this. Right now, we know that the open pit is a very attractive target and would is a very economic target as well. But really what we're looking at is how do we now combine an underground component and possibly that higher grade feed that we would get from underground to be able to combine that into the overall picture. And that's one of the reasons why we've delayed the PEA. We'd initially said we were trying to do a PEA at the end of last year. That would have only been for the open pit, but we felt that didn't really capture the upside of the underground potential as well, and how that could feed into simultaneously the same the economics for a combined open pit and underground.
And the open pit itself, is there potential for more mineralization, or is that very defined at this point to along strike, etc.?
Yeah, I'd say the mineralization in the open pit is quite well defined. We do see some smaller zones of mineralization within the granite, and there are actually a couple of areas on the property where historically some small-scale miners went in and mined some high-grade veins within the granite. The granites tend to fracture more easily. They tend to form quite discrete quartz veins with high-grade gold mineralization, but for the kind of size of project we're looking for, they're not a sizable target. So right now we haven't included any of the smaller veins that we see within the granite. There's even a couple sitting. You can see even up here. There's some grade sitting up within the granite. So we haven't included that in the model. Really the main play here is the mineralization hosted within these sediments. So it's a little bit different than some of the deposits in the area where you see more quartz vein hosted gold mineralization. We see the mineralization associated with a combination of both silicious and carbonaceous alteration. Associated also with some brecciation and quite strong shearing, especially towards the base of this sediment package. And then it kind of fades out a little bit, and you see weaker structural components, but continued alteration higher up in the profile. And that is associated with more mineralization, but probably not the kind of mineralization we're expecting to follow underground.
The trade-off currently is, I guess, you can chase this quite clear structure deeper, and the grades looks to be extending, but that has to be weighed against looking for potentially closer to surface, open pitable stuff in the regional package. So why don't you kind of showcase what ideas you have for the regional exploration and what you will be testing and drilling potentially this year in the regional package?
Sure. Okay, so yeah, if we go back to looking at the overall picture of the entire permit, I think it's quite important. So when we started working on this project back in late 2019, early 2020, we'd had the permit for a while. We knew there was gold mineralization in the area. Again, that really came from the small-scale mining activities that you can see leading up into this zone, into these foothills through this alluvial mining. That, as I mentioned, there are some small-scale pits that have been worked in these areas, and those have been chasing those quartz veins within the granite bodies. We don't really see those as a particularly high priority target for us, but it is definitely a very good indicator of you being in a gold-rich system. So back in 2020, we started working on this, and really the positive was we latched onto this mineralization very quickly. It provided a very distinct and very robust drill target, and really from late 2020 to from early 2021 onwards, it was really just a drill program of drilling this entire deposit out. The result of that, though, there wasn't a lot of regional work done. We did have some early soil geochemistry over the property, but what we actually found was that soil geochem really didn't respond very well to some of the regolith that's covering the higher portions of the topography here. So we've got very thick regolith duricrust that's been formed on top of some of these hills. It's a reflection of the more mafic volcanics that are sitting underneath, but it's effectively an iron-rich cap that's leached of anything else, so leached of any gold, etc. So this has been a challenge for us when it comes to more regional exploration. What we've done this last year is we've done quite an extensive what we call a Scout RC drilling program, and that Scout RC drilling has basically covered. It's almost like a ridge and spur soil sampling program that you do in some parts of the world, except here we've used a small Maruka mounted drill rig, and we've punched holes down about 10, 15 meters to get beneath that duricrust, which we know is leached and therefore is never going to have much of a gold response, and to get into the underlying saprolite where we expect to see more of a geochem response, both in gold but also in other indicator or vector elements. So what that's done is it's generated it's generated a number of geochem targets around. I just need to that's kind of thing. So this is quite early work. We unfortunately haven't released a more updated version of these results, but what we see is gold anomalies that are starting to develop in other parts of the project. Just do this a bit differently. There we go. What we're starting to see are other gold anomalies that are starting to develop, and some of these are quite clearly along what we would expect to see as structural trends running north-south, similar to what we see here in the east. So we've been infilling this. We've got additional results that are coming in now, and we're starting to actually go out and test these with deeper drill holes. So we've got a conventional RC rig that's got about 100-meter depth capacity that we're using to test these, and then we're also starting to use diamond rigs to really get a handle more on the geology. So as I mentioned, we're starting to see the development of more geochem anomalies from that Scout RC drilling program that we're now able to go follow up. What we've also been doing this last year is doing a lot more work on the geophysics side. So we're trying to understand, first of all, the geophysical response of Oco West itself. We've been running a number of IP, grading array IP surveys. What we've found is a very good response in the grading array IP that matches really where the mineralization sits. So we see a response from the associated sulfides that are sitting within the mineralized zones that are lighting up in the IP. And we're starting to use this now as we step out from Oco West itself, further to the west as we look at targets immediately west of Oco. And then obviously as we look elsewhere in the project where we're starting to get additional coverage with that IP grid. In combination of that, we've also got various magnetic surveys that are covering the property. We've been doing both ground magnetics and we've got an earlier airborne magnetics, which is also helping to feed into that targeting process and to give us particularly areas of structural complexity and cross-cutting shear zones that we expect to see as controls to the mineralization. So going back, moving on from the western part of the project, which is a little bit earlier stage, what we are doing is obviously focusing on this eastern portion where we have the eastern part of the project. We have Oco West sitting up in the north, and we have a continuation of this same contact zone running to the south. So although I said earlier on that our concentrated exploration efforts were really along this contact zone, you can see how here in the south we put a number of very wide space drill fences across that contact, really to confirm the geology, to make sure that we had the contact there, that we had that sediment volcaniclastic package, and where the mafics were sitting. What we've seen since, though, is that the structures controlling mineralization, they do deviate away from the granite contact. So although we chase this granite contact down into the south, we've started to see, as you saw in the geochem, we've started to see some geochem results coming up more to the west of that contact zone, and possibly more where you see these structures coming down. So it's still kind of early days, but obviously, finding additional resources that could feed into the project down the road is a high priority. This isn't a particularly large area. The distance here from the resource down to the south is about 5 kilometers. So it's not a particularly long distance to bring material should we be developing a mine in the north and then looking for additional feed for that mine down the road.
So is the next steps essentially to start, just drill testing these targets? What would you say that you need to do more target definition still?
There is a lot of drill testing to be done this year. So last year, we had kind of two priorities last year. One was upgrading the resources and obviously building out the resources which we knew were there at the main ore zone. The secondary objective was to bring up all of our data layers across the project. We were lacking in some of the geochem data layers that we wanted. We were backing in some of the geophysical data layers. So we've been bringing all those together, and so we've been developing targets. We're still waiting for some of those results to come in from last year, and as you can see there from the geophysics, there's still additional coverage that needs to be done. So I would say the first quarter of this year, we're still continuing with finishing off that data collection, especially on the geophysics. And then out of that, we're going to be looking at quite a lot of drill testing over the whole project as well.
So kind of between chasing further to depth at Oco West, extending beyond 1 km, what's your intuition? I mean, in terms of attractiveness, you guys can do both. I take it you can do that, and you can test regional stuff. But do you feel like potential for new satellite pits is more likely than just extending to depth in terms of add-on value economics for the proposed processing plant?
Yeah, so obviously there comes a point where we can keep adding more resources at depth. And it starts to add to the very end of the mine life. So
exactly,
the impact for us is obviously not, it's there. There's no doubt the mineralization continues down at depth. It's just at what point do you say, well, this is more of a problem for in 10 years' time than it is today. So I think right now the focus has been both on that underground and the open pit as a combined effort, and that's really where we're seeing that there's opportunities in possibly developing the underground simultaneously as the open pit and being able to bring some of that high grade material up into the early stages of the mine life, and therefore that has a much bigger impact on the NPV of the project. That said, outside of the deposit itself, this is a very gold rich area. To the north of us, we've got G2 that's operating and has their own resource. We see what I'd say very fertile structures in the region hosting gold mineralization. So there has to be more gold deposits out here to be found. I mean, this is I'd say quite a new developing district for Guyana. The same kind of workings that you see here in the east of the project, all these alluvial workings, you see exactly the same sitting out here in the west as well. So the source for all this gold mineralization that these alluvials have been mining still hasn't been discovered, and that from an explorationist point of view is really where the excitement is on trying to figure out where does that gold come from and how can we define an economic resource in a new area as opposed to just around the existing deposit.
Right, and are you looking for? I mean, you have this contact, and it forms kind of a long stretching trend. Are you seeing the potential, or are you seeing the potential for a parallel trend essentially then to the west? Or
well, that's the objective here is so maybe I should go back and talk about the gold mineralization a little bit. The main host, as I mentioned, is this north-south striking sedimentary package, which is trapped and sheared. However, the shearing is very early in the development of the current geological setting. We actually believe the gold mineralization is a later event. It's possibly a cross-cutting event that has effectively shattered and possibly used the relationship between these various granites to create space for gold mineralization to precipitate out. So what that means is you're really looking at areas of contrasting rheology, so areas where you're able to create space, and that contrast in rheology doesn't necessarily need to be from a granite and a volcanic clastic. It can be from an altered unit to an unaltered unit. So yes, we would expect to see parallel trends in other areas where you've got similar structural geological settings rather than simply similar lithological settings. So as we look out here to the west of the project, we know we have major north-south structures running through here. We know we have a variety of host rocks that are available to be both altered from the fluids that are coming up these structures, and combine that with later events that maybe are not so well defined and understood, where we're able to create space for more gold mineralization. So So yeah, the short answer is yes, we're looking for parallel trends. The Guyana, the mineralization here is very old. There's been a lot of activity. It's not easy to explore necessarily due to the lack of outcrop in the region. So it's really about using all the tools that we have available, the geochemistry, the geophysics, and then ultimately the drilling programs to really test and delineate where you want to be.
And then I should have asked previously, but when you've infill drilled both the open pit and the underground, you haven't really started to define up to indicated yet. But when you've infill drilled, have you generally seen positive surprises like veins popping up that you weren't able to model and stuff like this, increasing the average grade? What have you seen so far?
Yeah, it's actually interesting. Our conversion ratio from inferred to indicated, for example, we've actually seen almost a greater than 100% conversion due to the fact that what we're seeing with higher drill density is really an ability to define and delineate volumes of higher grade. So you're exactly right. When we started drilling this, yes, we had some very high grade hits. I mean, we're hitting intervals. You've got a 5 meters at almost 2 ounces, but early on, when you've got a very wide drill spacing, it's difficult to say, well, that's typical of this area. So you end up, the resource modeling ends up capping a lot of those. They say, yes, it's nice, but it's an anomaly. But what we've seen with greater drill density is we're starting to define some of those high grade zones, and we see them continuous from one drill hole to the next. That's 40, 50 meters away. And so, yeah, we do see a little bit of an upgrade in the grade itself as we've been drilling this. And so, yeah, we do have surprises in places, and we'll probably continue to see surprises as we drill more and we have a higher drill density as well. Because all that'll do is keep adding to the information of being able to better understand the structural complexity within the deposit itself.
So is that true? I mean, is that true for the share itself that extends to underground, or is it also true for the disseminated kind of mineralization?
It's true for all the mineralization. So the mineralization, it's not. We have high grade zones within those lower two domains, and then I'd say slightly lower grade in the upper domains within that sedimentary package. It's not really that we see low grade 0.1 mineralization all over the place. It's really defined into those structural / altered corridors within that sedimentary package.
I guess, I mean, you cannot speak of your concrete plans yet because you still have data collection to do. So in 3 months from now, we can speak again about that, I guess.
Well, exactly. I mean, look, I think what we've tried to explain to the market is, we announced our intention to do a PEA. When was it? Mid last year, almost, months after we put out the initial resource. I think that what we've recognized is that there is an underground component to this that we would like to capture in the economic analysis. So we just thought it was premature to put out a PEA on the open pit itself, and unfortunately that means having to wait because we are drilling deeper. It does take a little bit longer now. We just to mention, we have 6 diamond rigs turning on the property at the moment. We actually have another couple of rigs coming to the property in the next week, primarily for geotechnical work. So we're looking at the stability of areas for tailings facilities design, waste rock facilities design. So all these aspects that feed into not just the PEA, but the pre-feas and feasibility studies that would happen afterwards. So we're quite rapidly advancing along all those other tracks as well. And I'm sure, as Keith probably mentioned, we've been working heavily on the environmental baseline studies. We see this project going forward, and so we just want to be ready and make sure we've got all the information we need to be able to get to that permitting stage and get in construction as soon as possible. So right now, the next milestones are, we're going to be finishing off the underground, what I'd call the underground infill for that inferred resource. So we're looking at putting out an inferred resource and a PEA immediately following that by mid-year. And then we'll be moving the studies forward beyond that. And obviously, while we're doing that work on the PEA, we'll continue drilling underground. We'll continue drilling the underground to an indicated classification as well. So all that'll be ready for obviously the pre-fees and fees afterwards that requires that higher classification of resources.
And then just remind everyone, since you have the data in your mind, I'm sure. So what's kind of the average grade and average length of interception you're seeing in this kind of high grade extension that goes down to depth?
So
underground might be difficult for you to say because
yeah,
all the stuff released.
I'd say it's ultimately going to come out in the economics, but I mean we're looking at a anywhere between 20 and 40 meter thick zone of high grade mineralization at depth, and really the grades there are, you can have a look at some of our past releases, but we're looking at anywhere from 3 to 5 grams for that mineralization at depth.
You have different players that are already into the door in Reunion. On the other side, you have the G2, and recently AngloGold Ashanti went in and kind of endorsed what they're doing there. So that's another player putting their foot through the door. How do you think, companies, just reviewing Oco West, how would they think around developing it? Do you think that they would revise what you're going to outline in your FS and do something bigger potentially right away? What would be your interpretation of how a major potentially would think about this region?
I mean, the approach of a major versus a junior, right now I would say not much difference. The only reason I say that is because even though we're a junior, we've got more like major level thinking behind a junior company. Like the thinking we have is actually we will look at, if we couldn't finance it, and you wanted to say financing was the reason, you would take what I call a more conservative approach to how you develop it. The thing is I don't think that's a constraint for us, because I think this project's very financeable at a scale. Now the risk of a small company doing it versus a big company obviously is quite a bit different, but I think it's financeable even at a junior company level, our company anyways. Because why? Because number one, we've got probably the best builder developer in tropical mine building with experience out there is our partner. so number one, the worries that are going to be around whether these guys can do it is not going to be as high as it would be for a typical junior who's going to, EPCM out the project, and ours is actually a self-performed project model with G Mining as our partner. And that's only because we got the depth to do that. So we're different that way. But that being said, I would just say, if we were constrained by not thinking that we needed to do it in a more conservative way, we would look at that as a considered option, more on the basis of whether we thought there was not a chance of being able to properly finance the larger scale project. And the only other thing that could change it is if you stopped advancing the project to drill out more so that you could increase the scale of the project. The scale of this project already is big. I would say big enough for a major to be happy with the scale of the project, the way we're approaching it. And therefore, even them, they would only want to increase that scale if they had more ounces to add through stopping the advance of this and drilling the whole property off and adding hopefully a better understanding of the total potential on the property. Not drill it all off, but drill off enough to understand the full potential of the property along that 23-kilometer strike length, including G2, and then make their decision about how big a project are they going to build. But we wouldn't wait. Like, our view of that is don't wait, because you can always expand it later. So, don't wait, because time value of money on this, it's worth a lot of time value. If you can turn it around in 6 years at a scale like this is going to be a big scale mine. You're pretty good, and your returns are going to be good, and you're going to be smiling shareholders, because they're seeing cash flow very quickly from their investments. So
exactly, and if we turn over to the G2 discussion and how you think about this currently, so do you think that that is something that is likely to materialize before a construction decision is made at Reunion? That there will be some kind of merger? I take it probably shares for shares merger, where the Reunion management would probably lead the company or something like that. Or do you think there will be some kind of financing to acquire it, or what do you think would be the likely way it would play out?
It's very hard to predict. Like if it was just the two of us and that was the only thing that we had to sort out, it'd be one thing, because that would be when are both parties in a position to want to talk. When are both parties comfortable to be in a position to talk about bringing the assets together? But I think that's complicated by AGA taking a step now, and now others circling, let's say other interested parties, whether or not they're going to want to do something before the two parties do something. That's all. Let's put it that way. So that's about how you would sum it up, is really that that we and I think when you look at it from our point of view, and perhaps stand in G2 shoes, is G2 still big? They are, not, they have a 1.2 million ounce resource on an underground mine, and then they're drilling out a Guyana zone, and they're hoping to get a new resource out in the first quarter, and they've added 3 more drills. So they're only stepping up now to kind of drill like at the rate we're drilling. We're drilling like, we've had 8 drills drilling now for well over a year. We've rapidly added ounces, and we continue to rapidly add ounces. So I mean, the issue is for them is when you want to talk, it's hard for them to sit there as a counterparty and talk when they really haven't kind of advanced their discoveries as much as we have. Like, we've really hit that hard. And they have been slow because they only were drilling 2 drills or 2 or 3 drills, and it was a bit, they were drilling a narrow vein deposit, which requires a lot more drill density, and then lots of reasons why they were what they were doing, but they just aren't anywhere near as far advanced as we are. So then when you want to talk about relative values and everything like that, it's, they aren't feeling very comfortable in that conversation because they haven't really drilled out as much as we have. So they need to drill more. Would be my simple summary of that. They need to drill more, add more ounces, hopefully position themselves better in terms of relative comparisons, and then open to that discussion when they are ready. Maybe they'll catch up a little bit with the 6 drills they got now. So or 5 or 6 drills I think they have now. So that's kind of my view on the timing of any discussions. If it was just talking about us and them, but if you bring in the other parties, then there's no guarantee how that plays out, right? So it's hard to say, because someone may want to consolidate it now. So or someone may want to.
It's fair to say it's going to get really strategic within the next 18 months, probably, for sure.
That's right. This is a very interesting time. All we can do, and only thing we can control, is what we, advance. So what we're trying to control is what we can control, and we're, no matter what happens, all we know is that by default, if nothing ever happened, we would still have a project ready to build in 25, and likely could build it too, and do it, so, and finance it. And so I'm pretty confident we could do all those things, and we'd have ourselves a nice cash flowing business. Yeah, it's a single asset, which you wouldn't want to stay a single asset in that environment very long, but it's a very large scale single asset. Like, it's a premier single asset, right? So it's not a small single asset. It's of a scale like Torex or Lundin, or, it's in that range. So,
oh yeah,
it's not a little one, so.
And you have this underground component, you have the open pit component, of course. And when you say that you feel very comfortable about the financing portion, what would be, because you have the ability to kind of pull, you could do the underground right away, you could face it, you could adjust things depending on what Capex profile you would like to start with. What do you think is a reasonable upfront Capex that you feel very sure, I mean, this is easily financeable for you standalone?
Yeah, I mean, I would say, it's in the range. Let's put it in a range
Yep.
of the outcomes, because again, it depends on how we end up approaching this project, and obviously we're not finished with the estimating on the capex for the PEA yet. But it's a number of scenarios. One, if it's an open pit alone, just open pit where we don't bring in the underground early, then the capex number is lower. If we bring the underground in close to, but not right at the same time, but close to the same time as the open pit, then it's going to be a different number in terms of capex. So it's 600 to 800 million is kind of a good ballpark range to look at. It's somewhere in that range. So I think I think even up to 800 is probably, depending on the scale of the project. I think it's quite financeable, even up to 800, even as a single asset company like ourselves, a junior, call it a junior developer like ourselves. I think we can finance it, just because again, two reasons. One, we got great partners to build. Two, we're in a great jurisdiction. And three, it's a great asset. So it's a great asset with great jurisdiction and great partners. It's those things that people worry about. Is this asset going to, is the risk on jurisdiction too high? Could it be a Panama, right? Could it be could it be that? So lots of factors in there, and we with the, we're well aware of the Venezuela situation, putting a bit of a cloud over Guyana, but and we're in that Essequibo region, but it is something we'll look at whether we can get some political risk insurance on that too. So
Okay, and I mean, obviously you have a strong shareholder base too, so the equity side becomes easier as well. Decent valuation even now.
Yeah.
But since you mentioned that, I mean, just to briefly, what has the kind of the response been from investors and the mining community in general post this thing? I mean, it was kind of a storm in a teacup, and to me, it seems like a bit of a, obviously it doesn't seem very credible at all, considering the allies that protect Guyana and Venezuela, the political reasons for them doing this shenanigans. But some commentary would be interesting.
Yeah, I mean, I'll just give you, again, it's a view. We spent a lot of time thinking about it, talking about it, and discussing the ramifications. But yeah, I think I would conclude from, or we would conclude from, just like you've concluded, that I think it's very low probability, first of all, that something is going to happen in that regard, where it's just going to get annexed and taken over by Venezuela. I think that's a scenario that, when you look at all the you look at the situation and how it would have to play out, it's almost unlikely, very unlikely to see that possible. The 1% probability, or like a low probability. Then anything else that can happen there. I mean, it is a dispute that's been going on for over 100 years. Well, the dispute part of it started about the 60s, but Guyana has owned that for over 100 years, since the 1899 arbitral award was made, and only raised as an issue in 1960s, when Guyana got its independence from the British. That's when things started to Venezuela started to complain about it. And so when oil and gas discovery hit in 2015, that's when it all so it stayed quiet really from the 60s. Might have flared up a few times, but relatively quiet until 2015, when the oil and gas discovery. So it's all about surely oil and gas. And when you look at the oil and gas ownership, it's Exxon and the Chinese and CNOOC, and I think it was Hess, but I think it's now Chevron. But so those three players, and Exxon is very, very connected to the U.S. government at the highest levels. So there's no way they're just going to sort of give it up without a fight, so to speak. So anyone who wants to pick a fight, I guess the question is you pick a fight, you're picking a big fight. Like, so it's not a fight you maybe think you're going to win, or that in the end it's worth it for you to take that fight on in terms of your own. So I think it's only going to get either settled through negotiation or through a court decision, is my view. And I think negotiations is a possibility, but I think in the end, Guyana is going to not be too willing to kind of give up without getting something in return. So they're not just going to give it all up, because they've had it for 100 years, and it's important to them. So it might be some compromise in terms of how that plays out, but that's a negotiation. And then I think everyone's really hoping that it's just settled by International Arbitration Court, ICJ. Currently, Venezuela has said they don't recognize the ICJ in terms of this decision, being able to make this decision. So that has to play out somehow. Either they change their mind, or they get some pressure applied to them by others to go along with it, or they find another way. But it's only other way I see is negotiation, because I don't think it's going to be take on the U.S. and others who don't want to see this happen. So I think Brazil, I think China, I think the U.S., I think others who have a vested interest in the region are not letting that happen without quite a there's going to be a resistance to that from happening. So
yeah, not to mention, I mean, the Venezuela's military force is just ridiculous in comparison. They have no navy at all. I mean, they have no capabilities to even do something. So the deterrence is overwhelming.
That country is struggling at the best, and there's mass exodus of their people. Economically, they're in bad shape, and the sanctions by the U.S. and others has hurt them badly, and they're hoping to win over the U.S. in terms of the sanctions issue. So they want to get back to being able to sell their oil and gas and to their neighbors and so on, particularly the U.S. So,
but in terms of negotiation, just to clarify, some might get concerned. Well, are they going to draw some new lines, or what would be what's your intuition on the terms of what could a negotiation look like?
Yeah, I mean, I couldn't tell you what. I mean, it might be a mutual agreement for some land to be negotiated, or a portion of land and offshore rights to be negotiated. That would be a compromising solution, right? That would be my only interpretation of a negotiation that would create some sort of a win for Venezuela and some sort of a acceptable loss from Guyana's perspective. So that's the only thing I could see, but not
do you think
Guyana is willing to do that, but
do you think especially the debtors will require you to have some kind of agreement in place of financial protection from the government of?
Well, I don't think Guyana would give up anything that's already developed or a project that's going to create economic value to them. Like, they're not going to negotiate away stuff that's already very important to them, like the oil and gas that's already discovered, or the mining discoveries that are already discovered. Either one. I don't think that would be part of the negotiation. I think the only thing they give up is the stuff that didn't have any real, just economic value at this stage to them. That they might. I'm only speculating on what they would give up, but for sure they would not give up anything that's already creating economic value for them. So, or potentially creating economic value for them. So,
yeah, and Oco West will be many billions of dollars in revenue once it's built. So it's certainly for a small country like Guyana very significant, very, very significant, right?
Exactly. Yeah, and it's very much in the eastern edge of that, right? We're close to the Essequibo, so there's a lot of land west of us that still goes all the way to Venezuela, but we're actually very close. We're only 40 kilometers from the Essequibo, so we're very close.
And just that jungle will be,
I don't know what it is, 300-400 kilometers all the way to the Venezuela border. So we're like almost on the Essequibo boundary. So.
Okay, I think that settles that point of concern for I would say 99% of people out there. And then finally, we always like to ask, and your roadmap is very clear, but where would you want to see Reunion in 3 years from now, and what kind of approximate shareholder returns would you like to have been able to perform during that time period compared to where we are currently? What do you think what's your kind of internal goal on that?
Well, I call me an optimist, but I believe that as shareholders of this company and shareholders, uh, this is a very promising situation for shareholders because it can play out in a number of ways, but no matter which way you choose, it always will end up, I think, with a significant value upside to the current share price. So because if it plays out as somebody takes it out, I mean, an asset of this quality, if you can look at others that have been taken out that are of this kind of quality, that they get quite a premium if they're taken out. So, and this one is in, it's if it got permitted and we got, a definitive feasibility study, that's a fairly well defined project and a fairly well certainty to at least a high degree of certainty to delivering some value with it. I think that's the journey. And if it's us moving it as a company down the road, either ourselves or with a partner, uh, that adds value very quickly because it moves from construction, where the Lassonde curve says you're in production and commercial production and you're on the upside, is only a couple of years away. So, or 3 years away. So it even plays out there if the project scale and cash flow generation capability is realized as we see it. It has that great potential to generate a lot of cash flow from a very large scale production profile. Almost like tier one, right? So it's pretty close, not quite, but so it's pretty big upside there on share price. It might have to wait a few years, but whereas if you're taking the cash today, you might not realize that full potential. If somebody were to make a takeover bid, you might not get that full potential, but you'll get it now, so it's immediate. But that's the difference. So and again, if it's a large scale company, then you're holding on to shares in a large company, or you're taking cash from a large company, or if it's a mid-sized company, maybe there's upside in re-rating the company, that sort of thing. So there's upside in every path. It's just a question of which path we end up going down. And all we're doing is evaluating all those paths so that when it comes time to make a decision, we'll be well informed for our shareholders, well informed about what we can recommend to our shareholders as the best decision at any point in time. So on any of those pathways. So